Hello, how's it going? So, let me start by saying I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Um, this is not a live stream I was planning to make, nor one that I wanted to make. But I've got what 5,000 subscribers, so might as well let you guys know what's going on. The purpose of this channel is to keep people informed as to what my opinions are. So, hey, how's it going? So, my last video, or my last live stream, was about Silicon Valley Bank and what that meant and what happened. And it gave you an idea of what's going on, but it didn't really break down, so I might as well break it down for you. Everyone remembers 2008, right? 2008 was a bad year, to say the least. So, if you haven't seen The Big Short, watch The Big Short. Explains 2008 pretty well. So what happened was that a bunch of banks were over leveraged, and they got screwed with they were over leveraged with mortgage-backed securities. So as a result, when mortgage-backed securities plummeted, they lost a ton of money. They were undercapitalized. They had liquidity problems, and as a result of that, a lot of banks basically went under. Bear Stearns went under. Whole bunch of stuff, bad stuff, right? So, what have we learned? What has we as a country, as a people, as a world learned from 2008? Do we fix the problems of 2008? No, we didn't fix any of those problems. So we swept it under the rug and we forgot about them because that's what we do. So, if you watch The Big Short, you'll note that there was a Brad Pitt character in there, and the Brad Pitt character was interesting. He was helping out what was it? The Burr Brownfield Investments, I think, something like that. Yeah. Anyway, these two guys who made some money and then came across his mortgage-backed securities problem, whatnot. This Silicon Valley Bank going under is a direct result of 2008. And what happened? Is Silicon Valley Bank involved in mortgage-backed securities? No, they're not. But as a result of the MBS fiasco, and that was a huge fiasco, some people got together and decided that they would pass better banking requirements. This is called Basel III. Basel III came along and said, you as a bank, you need to, hold safe assets, not these risky mortgage-backed securities. The safe assets are called Tier 1 assets. Tier 1 assets involve what's known as sovereign debt. Basically, it involves T-bills, treasury bills. Of all the sovereign debt instruments out there, the U.S. is the reserve currency of the world. Therefore, the U.S. T-bill is the most revered and most desired of all the sovereign debt. If you know what a sovereign debt crisis looks like, chances are it's because you're from Greece, or you're from Portugal, Ireland, Italy, because you saw that stuff happen a few years ago in the sovereign debt crisis that happened in Europe. So this is basically what we're trying to avoid in the U.S. So what happened? 2008 happened. A bunch of bureaucrats got together and said, hey, we will restore confidence in the system by passing Basel III requirements. Basel III requirements basically say you must hold Tier 1 assets. Tier 1 assets are basically T-bills, because the U.S. T-bill is considered to be the best of all Tier 1 assets. What is a T-bill? A T-bill is a debt instrument. It's a promise to pay, and the U.S. government promises to pay 100 cents in the dollar of what the face value of a treasury bill is, right? If you get a treasury bill for, let's say, $100, the promise is to pay $100. Now, what you pay to buy that treasury bill is called the discount rate. And people figure out you might pay $90 and it might pay out over 5 years or 10 years. You might pay $60, it might pay out over 10 years, whatever, right? So the value of the T-bill fluctuates over time based upon what, interest rates are going for. Now, as we know, in the last few years, we've had near 0% interest rates. So all the banks loaded up with near 0% interest rates. And if you have a bank account, that your banks have been paying you near 0% interest rates. So everyone's been being paid near 0% interest rates, and this caused the housing market to go up like crazy because mortgage rates, the mortgage payments were decreased as a result of that, right? So anyway, so all banks are now loaded up with T-bills as a result of Basel III requirements, and they go through periodic stress tests to make sure that they have enough T-bills and stuff like that. What is a stress test? A stress test is basically someone going to the bank and saying, what are all the assets you have? They write them all down on a spreadsheet. And then they say, what happens if this asset goes up or down in value significantly? Okay. So if a particular asset goes down in value, like let's say you have a concentrated short position in some stock, and the price of the stock goes up significantly, you might fail your stress test, and you might be told, hey, you need to get rid of your concentrated short position because it's kind of risky. You could jeopardize your bank, right? That kind of thing. Let's just say those are the ones we're currently familiar with. What happened to Silicon Valley Bank is different. What happened to Silicon Valley Bank is that they had T-bills, a lot of T-bills, paying near 0%. And the Federal Reserve decided to increase interest rates because the interest rates were near zero, and they have no capability of affecting the value of the US dollar when interest rates are near zero. They have no room to decrease rates any further, right? They can try to stimulate the economy by decreasing rates. Well, when the rates are near zero, you can't really stimulate the economy. Okay, so the Federal Reserve has been wanting to increase rates, and the reason for their wanting to increase rates is so that they can later on decrease rates if there's a hiccup in the economy. That they want this margin. That's what they've been wanting all this time. So that's what's been going on. So the Federal Reserve started doing what's called QT, quantitative tightening, which is the opposite of quantitative easing, which basically means they're increasing interest rates, and they were planning to increase interest rates. Well, when you increase interest rates and you have a bond that is yielding near 0% interest rates, do you think other people want to buy your bond that is worth near 0%? No, your bond becomes near worthless because they'd rather get the bond or the T-bill that is paying a higher interest rate from the same entity. So SVB, Silicon Valley Bank, because they had a bunch of T-bills that were yielding near 0%, and the Fed was increasing interest rates, those bonds became worthless, or they decreased in value. They plummeted in value significantly. Some people found out that they have bonds that have plummeted in value, and they figured that out. And they said, "Hey, look, we're going to take our money out of the bank because, quite frankly, we have more than $250,000 in the bank, and FDIC only insures you up to $250,000." So they were like, "We better take our money out." So they started taking their money out of the bank. When they start taking their money out of the bank, it becomes like It's a Wonderful Life. And what happens is that the bank's reserves go away, right? So they started doing electronic wire transfers to get their money out. They're not going to the bank like in It's Wonderful Life to try to get their money out. They started doing electronic transfers. Those got stopped along the way. They became pending. So the electronic run on the bank was halted for a while. So people started going to the bank to try to get their money out, make sure their wire transfer went through, right? Because you're not going to carry millions of dollars with you. When that happens, then the reserves of the bank went down. It became a lot lower. And then the bank needed to raise some money to try to get some capital reserves. So they tried to sell some stock. So they can't really sell the stock at the market because their prices were plummeting. Prices were going down. Word had gotten out that they're having problems meeting their reserve requirements. And so their stock price was plummeting. But some people managed to buy stock in the bank. They thought they could get a bargain. Well, there's an old saying in Wall Street, never try to catch a falling knife. And this was definitely a falling knife, but this was a falling hot iron. It's worse than a falling knife. So anyway, the price was plummeting, and those people who put money into Silicon Valley Bank unfortunately lost a lot more money. Okay. So that was all that hit the news, and then the FDIC finally had to come in and say, "Hey, look, we got to stop whatever's going on here because we can't, we got to shut down the bank. So bank holiday magically happens, right? You can't withdraw your money, you can't do anything. Bank holiday, right? FDIC says we will cover everyone up to $250,000. Not a problem. Yeah, but a lot of people have more than $250,000, particularly the large investors, and there's a large number of venture capitalists who keep their money in Silicon Valley Bank, and a large number of small companies who keep their money from the venture capitalists in Silicon Valley Bank. That's just the way things are. So, what happens next? Well, we got word a few hours ago that the U.S. Treasury, the Federal Reserve Bank, which is not strictly a U.S. government entity, it's a quasi-governmental organization. It's part private, part public, and so U.S. Treasury, the Federal Reserve, and who was it? Oh, FDIC, the Federal Depository Insurance Corporation. They got together and they said, we will cover all depositors the full value of whatever their deposits are in excess of $250,000, essentially. And they put a note out to check out what they said. They said, you have no reason to take your money out of the bank, right? But quite frankly, we're in a situation now where if you're a depositor, you may or may not feel very comfortable keeping your money in the bank. If you had tried to wire transfer your money out and you were unable to wire transfer your money out, will those wire transfers now be reactivated? Will they now go through? And if they do go through, will that result in reserve requirements being hit again? And if so, how are they going to get additional reserve requirements? Well, the President of the United States has stated that there will be no official bank bailout, but the Federal Reserve has this magic technology called a printing press. The printing press basically says you can print money and use that money to shore up the bank. Okay. Again, the printing press was activated in 2008, and it took an act of Congress. It was at that time something like $800 billion. Later on, became several $1 trillion as the printing press became QE. And yeah, that's what happened. So if you enjoyed 2008, we're looking at a potential 2008 situation again, except this time it's not mortgage-backed securities. This time it's a sovereign debt crisis. What to do in a sovereign debt crisis? Well, again, I am not a financial advisor. This is not financial advice. This information is intended for education and information purposes only. Okay, and entertainment purposes only. This is my opinion. I have no idea what to do. Okay. There was a bunch of stuff that people think about doing, but doesn't. I don't know if it works nowadays. Okay. A long time ago, people had the idea that they buy precious metals, gold and silver, because in the event of a total black swan situation, that you buy gold and silver, and if the whole world economy crashes, you'll have some physical gold and silver with you. Other people say, you might as well buy some gold and silver stocks because you can't buy enough gold and silver. You won't be able to get your hands on the precious metal anyway. So maybe you buy gold and silver stocks. If you look back in time, gold and silver stocks went down significantly in 2008. Okay, when the world needed to get out of the mortgage-backed securities, they went to the U.S. dollar, cash. But what happens when the U.S. dollar itself is not a place that is safe? Right, that's the possibility here. The Federal Reserve can print more U.S. dollars, and that's probably what they will do. So they'll probably print U.S. dollars and shore up the bank one way or another, okay? Whether your bank needs it or not. Now, question comes up. What is the next steps? What's the next things that happen? Well, there are a couple ways out for some people. Some people may say, hey, look, as an insurance policy, they're going to buy put options on banks, or they're going to short the banks, because if the banks go under, they want a way to have insurance, right? So they might do that. Well, the last time they did that in 2008, the SEC said, no, we're not going to let you short financial institutions. And they had a list of some 700 or 800 financial institutions that you were not allowed to short. Just came out of the blue. Problem is, once you say you're not allowed to short financial institutions, it basically tells the rest of the world that financial institutions it's a confirmation. The financial institutions are in deep trouble. So, if you know financial institutions are in deep trouble, then you might want to withdraw your money from those financial institutions, and that will have the same effect as shorts. Because when everyone sells and there's not a single person buying, prices plummet, right? Right? That's what happens. If you got no buyers and everyone's selling, prices plummet. Is it possible that you might pick up some bargains as prices plummet? Who knows? Yeah, maybe. But the company can go bankrupt, right? So there's all sorts of possibilities here. The SEC has a goal, and their goal is to maintain the status quo. The SEC is a governmental organization. That is the only goal I mentioned that any governmental organization has, is to prevent anarchy. That's the only thing they really give a flying F about, okay? The whole reason government is there is to prevent anarchy and riots in the streets, unless riots in the streets are what is desired by that particular government. And that's beside the point. Anyway, so that's what the government is there for, okay? And if preventing anarchy means that you're supporting the establishment or the status quo or whatever, that's what that means. So that is what the goal of the SEC and all governmental agencies are, okay? They're all trying to avoid a catastrophic tail risk event. And in case you think it can't happen here, it happened in several countries that it couldn't happen at. Okay, happened in Germany, Weimar Republic. That's a possibility. It happened in France. You've heard of the French Revolution. Well, the result of the French Revolution was pure anarchy and the guillotine and all sorts of crap like that. You don't want that. Okay, so we're all trying to avoid anarchy. We're all trying to avoid Madame Lafarge. We're all trying to avoid stupidity. So what can the government do? The government has some options. Hopefully they will employ them. To date, I do not see them having done so. They basically said, oh, there's a fire out there. So they've decided to take a squirt gun and shoot the squirt gun at a fire because it's a freaking raging fire out there. Okay. What they need to do is they need to take drastic action and see a few companies go bankrupt. And toward that end, I basically think that they should go under the guise of saying, "Hey, we've had enough of." The government doesn't have to say that there's a massive problem with the banks, because if the government says there's a massive problem with the banks, everyone withdraws their money. That is a lose situation. Okay. So what the government has to do is they have to restore confidence back into the system. The whole system is based on confidence. The only way you can get confidence in the system is if people believe that the system is not falling apart. If they believe that the system will continue forward. So you need to do something to restore confidence. And one way to restore confidence is to basically say, "Hey, look, we found a bunch of hedge Fs who were taking advantage of the system, shorting more stock than existed, right? They were naked shorting. They shouldn't have been naked shorting. And those guys, we're going after them and we put them in jail and we're stopping naked shorting." If they did that, that would solve the banking problem, because now you can't naked short. And if you can't naked short, that means you can't short bank. That solves the shorting problem. That doesn't solve the longs from selling their bank stocks. But in general, if you're not preventing shorts from doing something, but you're solving a secondary problem of naked shorts, and a lot of shorts are now going bankrupt, shorts don't have any money to short the banks anymore. Okay, that's the way that works. A bunch of people are that's basically what they need to do. What they need to do is they need to stop all naked shorting. They can't just say we're going to stop shorting on the banks, because that shows weakness. We need at this point a smart, a clever government. Okay, one that knows what the frick they're doing. Unfortunately, we have what we have right now. It is very sad. Okay, so. Say what you will about Bernanke, at least he was smart. I mean, give me a break. I don't like Bernanke, by the way. So anyway, we need them to do something. This is why I made this suggestion. I hope it gets up to somewhere, and I hope that someone decides to say, "Hey, look, we will cease all naked shorting." You can make an example out of MMTLP. That's perfectly fine with me. But the whole thing is they need to stop naked shorting. It's not just for the sake of MMTLP. Yes, I have a shitload of MMTLP. I have a fuck ton of MMTLP stock, okay? I would love and Nextbridge hydrocarbon stock. I have enough that I will be very happy. Okay. But this video is to let you guys be aware of what's going on. Okay. It's not to try to promote MMTLP or whatever right now. Right now, we're in a worse situation. The situation we're in is the fact that Silicon Valley Bank was doing what they were supposed to do as far as Basel III requirements go. They weren't doing anything bad. They weren't doing anything wrong, per se, right? And they fell. And because they fell, there's weakness. When there's weakness, confidence gets lost. When confidence gets lost, you get potential runs in the banks. When you get a run in the bank and it's a fractional reserve system, then that's what happens. Okay, there's a few guys out there who understand what's going on. Um, if you've ever read a James Rickards book, I personally like his first book, Currency Wars. Check it out. He tells you exactly what's going on here with the sovereign debt crisis. This is basically the start of a sovereign debt crisis, and they need to stop it. Okay. Anyway, so that's what I wanted to say. That's what a sovereign debt crisis looks like. I don't want to see a sovereign debt crisis in the U.S. It's not pretty. So anyway, so this I have about 5,000-6,000 subscribers. So there's a small number of people who will actually wind up seeing this video. So I think at least you guys will be aware of what's going on. I suspect at some point in time censorship will take place and this video will be taken down. But at least you guys will have an idea as to what's going down. Where are safe places to put your money? Well, I expect what's going to happen is that we're going to have tons of money being printed by the Federal Reserve because they obviously have not acted as fast. They need to act fast and with strength, okay? And they didn't do that, which means they don't know what they're doing, okay? So if they're pussyfooting around and they're like trying to figure out what's going on, then that's a problem. So that means that they're going to underreact, and at some point they're going to have to overreact, right? So again, I was talking to some friends yesterday. They said, well, this whole situation is caused by QT, so they'll just stop QT and the situation will go away. Yeah, they would. QT would go away if people still had confidence. But at this point in time, the question is, do people still have confidence, right? Do most people trust mainstream media? Probably not. Do most people trust financial institutions? Probably not. Do most people trust the government at this point in time? Probably not. Okay. Do most people think that the government or the Fed can control the economy? Well, we know they can lower rates, but rates are pretty low. They've been raising rates right now. So let's say they stop QT. What happens if they stop QT? If you stop QT, then you're basically not increasing interest rates. So let's say you level off interest rates and you don't increase interest rates anymore. Well, okay, good. Now you've already increased interest rates. So the previous bonds that you had are still worthless because your interest rates are leveled, right? So previous bonds you had are still worth a lot less than they were. Suppose you decrease interest rates. Okay, you can decrease interest rates. Now those bonds at the previous bonds you had before at those near zero interest rates, they're worth about as much as whatever your new interest rates are, right? So, but those new bonds that were at much higher interest rates, those are worth a lot more, right? Wouldn't you rather have those bonds? And when that happens, that means that people can cash out on those bonds. When they cash out on those bonds, they'll have a bunch of cash. What are they going to do with that cash? Are they going to put it in the bank that they know is unstable? No, they're not going to put it in the bank. They're going to short the banks because they know that the banks are already weak because they had to do QE to shore up the banks again. So, and if they went out and they said you can't short financial institutions, that means financial institutions are weak, and then they wind up again back in that same circle again where the longs wind up selling. They don't want the longs to sell. They don't want the shorts to attack. The best thing that they can do is attack the shorts, leave the longs alone, and try to restore confidence back in the system by saying, hey, look, we are going to fix the problems in the financial market. Okay? That's what they need to do. Are they doing that right now? No, they're not doing that right now. I wish they would. Uh, so, is there a solution? I don't know. What's going to happen to the U.S. dollar if they proceed forward on this path? Right. What's eventually going to happen is that banks will need additional capital reserves. They're not going to have that capital reserves unless there's a direct infusion of cash into the banks from the Federal Reserve. So the Federal Reserve prints a bunch of money, deposits it in the bank. Now the banks have a lot more money, and they meet their reserve requirements. They're shored up and strengthened up again. Okay, that's the next step. When that happens, what happens? Well, you've printed a lot of money now, and the banks have their money in cash, but but according to Basel III, they have to be in Tier 1 assets. So let's say they suspend Basel III because of some issues right now. The banks still have to put their money somewhere, and they'll probably keep it in cash for now, and they'll probably be forced to keep it in cash. But now you have all that cash lying around in the system, and what does that extra cash in the system do? It causes inflation. Does the Fed care about inflation? Yeah, they care about inflation, right? Because inflation is the stuff that causes revolutions and anarchy. Okay, when inflation gets too high, you get what's known as hyperinflation. You don't want that, right? You get hyperinflation, your dollar collapses in value. And the problem of the dollar collapsing in value is the US government, the United States of America is not Greece. The United States of America has a reserve currency status. Every single freaking nation in the world holds US dollars as their reserve currency because they trust the US dollar. Why do we have reserve currency status? It's because of something that happened way back in the 1933 or something like that, Bretton Woods. It was decided around World War II timeframe that the U.S. government who was the only, at that time, only nation not embroiled in war. Everyone sent their money to the U.S., right? Everyone sent their money in the U.S. because it was safe. Switzerland was also another safe place. But anyway, everyone sent their money to the U.S. The U.S. sold a bunch of arms to everyone in the world, and they fought a bunch of wars. We picked up a lot of debt from everyone, and so we became a very rich nation. We got involved in the war later on after everyone was tired, and we won World War II. So there you go. Quick history lesson. Anyway, so we got reserve currency status, and everyone since then has said the US dollar is as good as gold. And they said that because of Bretton Woods. Bretton Woods basically said that you could exchange a $20 note for a $20 coin, and that was a $20 gold coin. But then gold was devalued at some point to be $33 or something like that, and by 1972 it was something like $42 per ounce of gold, but it was still as good as gold up until 1972. And if you were a non-U.S. citizen, you could exchange any of your U.S. dollars for gold. That's just the way it was. So the U.S. dollar was as good as gold. People wanted to hold the U.S. dollar. After 1972, we got off the gold standard, but we still maintained reserve currency status. So everyone wanted to hold the U.S. dollar. Shortly after we got off the gold standard, by about 1974, we had what's called an energy crisis. The price of oil went through the roof, right? It went nutsoid. We couldn't get oil. We had gas lines. There were shortages, all sorts of stuff. A lot of people say, hey, that's a problem of OPEC. It wasn't really a problem of OPEC. The problem was that there were a bunch of Saudis who got a bunch of US dollars. And the US government went off the gold standard. So, as far as they were concerned, they previously had something that was as good as gold. Now they had something that was not quite as good as gold. So, what did they do? They bought gold. The price of gold skyrocketed. When the price of gold skyrocketed, the price of the dollar in terms of currencies around the world, it plummeted, right? The US dollar was plummeting in value. That basically meant if the price of oil was stable, but the US dollar was plummeting in value as far as the US citizens were concerned, the price of oil went through the roof. And as a result, we had high oil prices and we had gas lines because there were shortages. Okay. All of this is history. It's noted. If you live through it, you live through it. But along the way, by 1974, when you saw the gas lines, you saw the price of gold go up. You saw the price of silver go up like crazy. There's a another story about the Hunt brothers. I won't go into that. But I think it was a Playboy 1980 article or 1981 article, something like that. So somewhere around there, that had a really good detailed interview about Nelson Bunker Hunt, I believe. He tells his side of the story and what he was trying to do. He was not trying to corner a market. He was just trying to preserve his wealth. Anyway, so yeah, this channel says this is the news that nobody tells you, because this is my opinion of what I think is going on. Okay. Again, I'm not financial advice. It's not a financial advisor. This information is intended for entertainment purposes only and information purposes only. So that's what's going on, and that's what I want to talk to you about. So let's go to your questions. So let's see. Yeah, I'm in top chat. I'm going to go to live chat, and I'll start from the front. Tony, what is your opinion on how long it takes to fix MMTLP problem? It can be fixed tomorrow if they decide to fix it. They just have to turn back time, allow trading again. And by the way, if they do that and they say, "Hey, look, FINRA made a mistake," and along the way a bunch of short sellers get destroyed, that does double duty, right? That sends a message that, hey, our financial systems are actually, we're trying to clean them up. They're still good financial systems. That sends that message. First message. Second message sends a message to shorts. Hey, your days of shorting are numbered. We're going to let you go back. We're going to let you go belly up. You better not be shorting bank stocks. You better not be shorting anything right now. Stop your shorting. Okay. When the shorts stop shorting, what happens to the stock market? The prices go up, because there's about $30 trillion in shorts right now, which is really sad, but there's about $30 trillion worth of shorts. So that gooses the economy, that gooses the stock market. And you know what? At that point, there is no problem with people wanting to take their money out of banks. If they take their money out of banks and put it into the stock market because they see prices are rising, I got news for you. The president's going to be very happy. It doesn't matter who the president is. He's going to be incredibly happy. Let's see. Winston, I'm going backwards from the, what is it? I'm going backwards from the time of whatever. We'll see. Daphne says, I'm very curious what is going to happen tomorrow and this week. I have no idea, but I expect there will be massive fireworks. If the regulators and the banks have an ounce of brains, they will fix this problem. And along the way, MMTLP will be fixed as well too. Okay, if they have an ounce of brains, I would hope that they have an ounce of brains. But the bigger issue is what's going to happen this week. I expect there's going to be massive turmoil in the financial markets, possibly in the banking sector. We might have some stealth buying of bank stocks. So if you looked at SVB, that stock price plummeted, right? But if you look at the other stocks, the other bank stocks, Bank of America, Wells Fargo, all that, the prices went down, but not by much. So if you're a short, you know that, hey, look, SVB has already gone down a lot. Okay, where else can I make money on? Oh, mainstream banks, go for them, right? That's the whole thing. So chances are that shorts will try to short that, and chances are we'll suddenly have enforcement of of locate rules and naked shorting, and saying, hey, are you naked shorting for market manipulation purposes? Can you locate this stock? I expect that suddenly rules get enforced dramatically, and if rules get enforced, maybe all rules get enforced. Who knows? But next week will be an incredibly interesting week. Keep your eyes open. Keep your eyes open, keep your ears open, listen to what's going on. Yeah. Thomas McNamara, the government is a joke. Yep, this particular government right now, it seems clueless. Don't forget Reg Show duration from MTLP. Yes, Reg Show has been going on. We know that it went on for 41 days, 42 days, something like that, when it hit Reg Show, which meant that shorts would have to cover, but they never did. So they obviously didn't obey their own rules. Well, they stated, Daphne says, well, they stated an extra tax or fee will be added to the banks to help pay for this, but it will get passed on to its, but will it get passed on to its customers? Yeah, of course, it'll be a cost of doing business. I expect that. So they stated specifically that not a single cent of taxpayer money will go into making sure that that the banks are bailed out. The thing is, for most individuals who had accounts at the bank, they probably had less than $250,000, and less than $250,000 means that they are fully covered under FDIC. But there was a bunch of institutions and individuals and entities at that bank who have way more than $250,000, right? They've got several $1,000,000. And those institutions would suddenly have lost all of their money, right? And that's a big loss. And so at that point, they went to Congress, they went to the president, and, apparently, if you have enough money and you complain to Congress and the president, they will act fast enough. Okay. So they said, okay, we will now extend coverage all the way out to infinity. All depositors will be covered, no matter what. Wow. Amazing. Amazing. So, let's see. For most people, if you have cash in Silicon Valley Bank, up to $250,000, you'll be covered. What happens if you try to withdraw your cash up to $250,000? I don't know. Maybe you'll get delayed. Maybe you'll get the runaround. Maybe, who knows? System is rigged, LOL. Stoner shake. Yep, agree. Confidence in corruption is never going to happen unless you're just a blatant liar. Wake up. Yeah. The system relies on confidence, right? And confidence has left the system. As far as everyone is concerned, at least all of my subscribers, I believe, we all know that the system is rigged and that the system is highly corrupt. The system is there only to make sure that anarchy doesn't reign. Okay, that's it. Winston says senior management has been removed. Yeah, great. They've been removed. They've got their bonuses though. So print more money? Yes, they're going to print more. Likely they're going to print more money. Okay. No losses associated with the resolution of SVP. No losses will be borne by the taxpayer. Yep, that is what they say. No losses will be borne by the taxpayer. They'll wind up printing money. So when they print money, that results in inflation, and no losses are borne by the taxpayer, except all your money becomes worth a lot less. If you're anything like me, you understand that inflation is a lot higher than what is actually stated, because I noticed that when I go to a restaurant, the bill's basically doubled. That means inflation is 100% as far as restaurants are concerned. Okay. As far as a lot of things are concerned, inflation is 100%, right? I mean, give me a break. Anyway, so they stated 8% inflation. Who knows? I have no idea. Anyway, Winston also says it just shows these corrupt institutions that they will get a parachute. Yep, they will get a parachute for sure. Don't kid yourself. They will get a parachute. Daphne says, I mean Fed action. Yep, the Fed is going to do whatever it takes to try to restore confidence, but they're going to need the SEC to take action to stop shorts. That's the main thing that they're going to need. They may even have silent action where suddenly the SEC will enforce rules about shorting, period, and shorts will have to get a locate, and they won't be able to find any locate, and that's that. I wonder if this action will lighten the blow a bit. I don't know. I hope so. Who knows? It's hard to say. I think it's a case of too little, too late. I do. Tony, I think the government may have just created a bailout as an early borrow. Yeah, it's a stealth form of, to me, printing money is a bailout, because basically they're creating more money and they're reducing the value of everyone's savings. So printing money is a bailout, but it's a stealth bailout, right? That's the way all this stuff works. Hello to everybody. So I've gotten to the hellos. Great. Now let's move on to the other stuff, to the newer chats. Hi, Tony. SVB sucks going to trade again. Is the SVB stock going to trade again? Yes, I believe it will. But we'll see. We'll see. Yeah. Silvergate is shorted 77% plus. Yep, Silvergate is shorted. Silvergate was allowed to fail because Silvergate was a bank that was being used by crypto or some crypto people. So selective enforcement. Silvergate was allowed to fail, but I think that what they need to do is that I think they need to allow GTS to go under, and that will serve as a strong message to shorts. Right, Ari Rubinstein and GTS would make a very good sacrifice because it basically shows that the Fed isn't messing around. Right, right. It gives message to the appropriate people. So, you think Trump's deregulation? You can thank Trump's deregulation of Dodd-Frank. I'm not going to thank anybody for anything right now. The whole thing was screwed up as far as 2008 was concerned, and it had to do with the situation was not solved since 2008. It had to do with this is a solved. This is potentially the start of a sovereign debt crisis, and they never solved the problem in 2008. Yeah. Do we know that the system is corrupt? Lol. Why would we think the shorts will cover on MMTLP? They don't want to cover. Of course they don't want to cover. They would only cover if they're forced to cover, right? They'll only be forced to cover if the SEC suddenly decides, hey, look, we need to set an example. And they need to set an example for all shorts because you can't selectively just say that shorting financial institutions is bad because then longs will sell because longs will know. Right? You've just given confirmation that all financial institutions are incredibly weak because of Basel III requirements. Is Silvergate getting delisted? Silvergate is expendable. You can thank Bill Clinton for the 2008 crisis. Okay, it's going back and forth between Trump, Bill Clinton, and everything. Look, I'm not going to go into the details of the 2008 crisis and all that. Quite frankly, investment banking and banking should have been separated as per. I forget which one of those acts was. It was but anyway, sometime around, sometime back, some banks and investment banks, which are two totally different entities and have two totally different risk profiles, decided they could be one and the same. They lobbied Congress. Congress agreed to it, and they said, "Hey, you can be investment bank. You got the word bank. It's the same thing, right?" So when that happened, banks took on a huge amount of risk. This is the end result of it, right? So, do I hope that there's a solve? I hope I'm wrong. If I'm wrong, that's great, right? I hope I'm wrong because I don't want to see a sovereign debt crisis. I want to see life proceed as best as possible. I don't want to see a sovereign debt crisis. Nobody in their right mind wants to see that, right? What's my gut feeling on a timeline for MMTLP resolution? I have no idea, but I hope that they're smart enough to do this and get this done as soon as possible. Okay? Because you need to show that the system is not corrupt. And the best way to show the system is not corrupt is that you find corruption and you say, hey, look, we found some corruption here and we prosecuted, we made sure that the right thing got done. By routing out corruption, you can show or give an indication that the system is safe, right? That's what you do. You deregulated also big time. Okay, what's your feeling on timeline? Okay. Yes, there's been a lot of deregulation. At some point, banks have a problem in that they operate on a system called fractional reserve, and it basically means that they take your money and they spend it on stuff that they expect to make more money at, but they don't have your money right now to give to you. So what they do is they print fake money, and they have this thing called a reserve ratio. And if you operated on a fractional reserve basis, that's called fraud. That's called counterfeiting. That's called a whole bunch of stuff. Okay, banks are legally allowed to do that in order to prevent bank runs. Okay. So that's why banks do what banks do. They have a totally different set of rules because they have a totally different universe that they work in. Okay. Why wouldn't shorts change their algorithms to never close, seeing there's absolutely no consequence? Squeeze plays may never happen again. Shorts try to never close. That is what they do. And but if they're forced to close, they will, and they would like to close at a profit, which means they would like to close when the prices are low. In the case of MMTLP, everyone knows they can't do that. Everyone knows that they can't do that. The only people who don't know are people who have decided to stick their head in the sand and cover their ears and say, la, 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 I can't hear you. I can't see you. Okay, it just takes a little bit of digging and then you see exactly what's going on. SVB had to sell its bonds at a loss to raise cash. That is correct. Limited transactions like this would not have been catastrophic, and in fact, that would happen regularly in the financial sector on a small. SVB was a case of mismanagement, but that was made possible by the unrealistically low rates up from the Federal Reserve. What you say is, well, what you say is sort of true. Okay, this is Vinev. Okay, so I will contend that banks need to hold Tier 1 assets as per Basel III. Tier 1 assets involve sovereign debt, involve government bonds, T-bills. They are considered the most secure of assets. When you buy a T-bill, you don't buy it. When you buy a T-bill that is worth $100, you don't spend $100 on it. You spend $90, you spend $70, and so you spend less money on the T-bill, knowing that it will pay out in total $100 over time. That's called a discount to the actual face value. And the rate of and people calculate a compounded interest rate based upon that discount. So when your face value is near 100%, right? When your face value is near $100 for a $100 T-bill, then you're getting near 0% interest, right? But when interest rates start to rise significantly, people would rather buy those newer T-bills that pay out more because they're cheaper. Why would you want to hold a T-bill that will pay you near zero, right? So that causes T-bills to drop in value significantly. So I contend that SVB had almost no choice because they had to hold Tier 1 assets, okay, as per Basel III requirements. So was it mismanagement? Are you saying that the corporate management of SVB were a bunch of yutzes? Maybe they were. Were they complete idiots, or were they following the rules as they needed to? Chances are they have at least a high school diploma. Most likely they've graduated from college. Most likely they understand economics, and most likely they understand what's going on with reserve ratios. So most likely they were doing what they had to do in order to comply with whatever the rules and regulations are, right? I remember, what was it? Around 2013 or so, I did this thing for VLab a while back, and it was a crypto thing where we had the Winklevoss twins on there, and we talked about crypto and all that. But along the way, we also had someone from Silicon Valley Bank, and she was meant to represent the current status quo, right? The banks at that time were the current status quo. They still are the current status quo. And she was meant to show how, unrealistic crypto was at that time, right? And so we interviewed her and all that. And during the private interviews that we had prior to the public interviews, she indicated that SVB had spent about 30% of its expenses were based upon just meeting regulations, just making sure that they adhere to all the rules and regulations that are out there. There's a ton of rules and regulations that banks have to adhere to. And they spend a lot of money on that. So chances are, if they're spending money on rules and regulations, they know what rules and regulations they have to adhere to, and they will not be doing stuff that is a case of raw mismanagement. Banks are usually the most conservative of creatures out there. Anyway, spot of tea. I got 7K at Chase, but I am poor, so I don't care. If things get bad, I'll just buy gold and silver online. Yeah. Yeah, if you have less than 250K in the bank, it's not a problem to you. It's really not a problem. I have less than 250K in the bank, so it's not a problem to me. I don't care. But I do care about anarchy. Okay, so in that sense, I care about anarchy. So gold and silver, will they be, will they increase in value? Will they decrease in value? It's hard to tell. And certainly in 2008, the price of gold and silver did not increase in value significantly. Um, I think James Rickards calculated what he believed the true value of gold is. I think he calculated something like $10,000 per ounce or so. Maybe it's 20,000, I forget. But in either case, it's currently selling for $2,000 an ounce. If you bought a bunch of gold and silver, would you wind up being ahead of the game? I don't know. The price of precious metals is highly manipulated, and it's I would not necessarily bet on precious metals. Maybe. Who knows? It's hard to say. PHUC Tran says, FINRA, screw my FINRA, screw my profolio. How's the IRS going to tax my gain on MMTLP? Hey, IRS, why don't you make FINRA open up a trading so I can pay my capital gain tax? Yes, I agree. MMTLP should be resolved first, John Choi. Yeah, I agree. It would be the best thing for them to do, right? Set an example. Show the world, GTS, you screwed up. We're making an example of you, and every single short should get the message, right? That's the way it works. I need a few mods. I do. Anyone volunteer? Would you like to be a mod, Daphne? Please let me know what if anyone volunteers to be a mod, please go for it. Let me know, and I will try to make you a mod. Okay. Chris G, the Patriot. The people who sold at the top and bought back in on the last days were screwed the most by this MMTLP situation. Yes, they were, because they had to pay taxes on it because they made a huge amount of gain, and then if they bought everything back, then they don't have the money to pay taxes. Yeah, they're screwed. Gold and silver seem to have been going down with the market. Yes, they do, and that is because they are a manipulated commodity. It is in the best interest of every single government to manipulate the price of gold and silver down, because they don't want you to hold gold and silver. They would much rather you hold their local currency. Okay, every single government wants to be reserve currency of the world. Right now, there's only one, and that is the US dollar. I want to be a mod. Season never stop. Okay, how do I make you a mod? Let me see. Add as okay, season never stop. You are now a managing moderator. There you go. Daphne says yes. Daphne says I'll be mod. Oh, great. Thank you, Daphne. Add as managing moderator. There you go, Daphne. Thank you. Much appreciated. Again, this is my take on it. A lot of people may think it's a lot better than the situation is a lot better than what I'm saying. So I could be totally wrong. Again, I'm not a financial advisor. This is not financial advice. I'm not recommending anyone do anything, right? I want to be a mod, and I will do good things to you. Fine, you're a mod. I'm making everyone a mod who wants to be a mod. Joe Morgan, JP Morgan got in trouble for manipulating gold and silver markets a few years ago. Yep, they did, and I think they got in trouble again a while back. Yep. Yeah. They got in trouble multiple times. If you want to know how manipulated the gold and silver market is, there's an organization, I believe, what was it called? This is an organization run by Bill Murphy. Let me look it up. Bill Murphy. Bill Murphy. Yes. And Bill Murphy runs Bill Murphy. Oh, dang nabbit. Where is Bill Murphy now? According Bill Murphy speaking at the CFTC. Okay, so Bill Murphy spoke at the CFTC, and he spoke about a lot of things. He's the chairman of the Gold Antitrust Committee, GATA, that's right. And he, if you want to know how manipulated gold and silver is, check out the CFTC hearings, which took place, I don't know, around 2010, where you have some GATA members speaking. You've got Bill Murphy speaking. There's a guy called Adrian Douglas who spoke there. So look up Adrian Douglas on YouTube and Bill Murphy on GATA, and you'll see just how manipulated the gold and silver markets are. By the way, you'll see a very familiar face at the head of those hearings. That would be Gary Gensler. No, not Bill Murray from Ghostbusters. Bill Murphy. Bill Murphy was a wide receiver for the New England Patriots before he worked in the before he worked as a gold trader. And there was this thing called, what was it? What was it? Gold market. I believe it was 2001. Um, there was something which happened that I believed in the crash of 2000. There was something that happened in 2001. I believe it was, what was it? Um, oh, CFTC. So there was hmm, CF. Okay, so around 2000, 2000. I think it was 2000 time frame. Yeah, it was 2000 time frame. CFTC. Okay. If you want to see what, so nothing that happened in 2008 is actually totally new. Although we are aware of what happened in 2008 with the market collapse, there was a thing that happened in 2000, um, which is what was it? And, uh, mm, CFTC. So there was a Stanford advisor. I'm sorry. There was a CFTC chair in 2000. Chair 2000. Who was former chair of the CFTC. Back then, the CFTC was basically viewed as being a not very interesting person, not very interesting um, entity. And if we go back in time, let's go back in time to 2000 time frame, and let's see. She was pretty famous. She came out of Stanford. Chances are, Brooks Lee Bourne. That's it. Brooks Lee Bourne was head of the CFTC around 2000 around up to 1999. And 1999, Brooks Lee Bourne. Oh, at that time, the head of the CFTC was someone called Brooks Lee Bourne. She came out of Stanford. She went back into Stanford. She believed that there was a problem with what she called um, derivative risk. And back then, there was something that happened. So you can probably research it yourself, but I'll give you a gist of it. Brooks Lee Bourne became head of the CFTC. She got the position because she was smart and they needed to give her a position, and they figured she could do no harm at the CFTC, which was basically just, not doing anything. But Brooks Lee Bourne was an idealist, kind of, I view myself as an idealist. She wanted to do what the right thing was. Okay. And there was a company around 1999 that collapsed. 1999 collapse. Uh, and that Brooks, looking that up again. Brooks Lee Bourne. Old, I've forgotten all these things. Okay, so Brooks Lee Bourne was around legal career, Bourne's OTC. So she talked about the OTC derivatives market, and at that time, Brooks Lee Bourne was head of the CFTC, and Larry Summers, I believe, was head of the Treasury. And there was a company out there called Long-Term Capital Management. And if you haven't heard the story of Long-Term Capital Management, it's worth noting. Look it up. Definitely look it up. I'm sure people out there know what I'm talking about. There's a bunch of deleted messages. I want to be a model, do good. Okay, we have enough mods. I think I don't know what. Anyway, look up Brooks Lee Bourne, Long-Term Capital Management. Long-Term Capital Management went bust in 1999. And at that time, there was a guy called Bill Murphy. He was doing some gold. He was a gold trader. And he said, these guys, they have, so Long-Term Capital Management went bust because of their own mismanagement. But they had a bunch of quants out there, and they had figured out how they could make a lot of money in the derivatives market, right? This is pre 2008. So long-term capital management had a large had a lot of derivatives position, and it was expected that after they went bust, that the dollar would collapse, and that gold and the price of gold would skyrocket. And this was predicted easily by what was it? By Bill Murphy, who was at that time a gold trader. Well, guess what? Bill Murphy was wrong. Price of gold and silver did not skyrocket. And Bill Murphy said, "What the F is going on?" Now, Brooks Lee Bourne saw the problems of the derivatives market. She happened to go before, she had been talking about this for the last, I don't know, 2-3 years. Larry Summers said, "You're full of crap." And Alan Greenspan was there, and they all laughed at her before then. Well, long-term capital management went bust. They threatened to take down the entire U.S. economy and subsequently the world economy because of their large derivatives exposure. Okay. Well, suddenly they had to be bailed out, and they got bailed out to the tune of, I don't know, $100 billion, something like that, which at that time was a lot of money. Stealth bailout, they got bailed out, and Brooks Lee Bourne was proven right. A few months after she's proven right, everyone trashed Brooks Lee Bourne again, and they said, "Hey, F you, you're full of crap, whatever, and we're not going to make any systemic change to the derivatives market because, as you know, there's nothing wrong with the derivatives market. We want the fraud to continue because we make money that way." Okay. So she got cast aside, and she went back to Stanford University, where she was, became, I don't know, a professor or something like that. Anyway, Brooks Lee Bourne was a prophet. She knew exactly what was going on. She tried to stop the collapse of the financial system. It got prevented due to a bailout. Okay. Bailout happened. Long-term capital management was, they had their issue. A whole bunch of money got injected into the system to make sure that we didn't have a general banking collapse because, all that money suddenly evaporated. But again, it got swept under the rug, right? And no one thought about it again until 2008. So that's some stuff that's on my mind, and it is getting a little bit later right now, so I am going to have to head on out. But I just want to give you guys an update as to what's going on. The thing that we're trying to avoid, the thing that the government should be trying to avoid, is a general sovereign debt crisis, right? The only way to avoid that is to provide confidence back into the system. This is why I care. And to date, the problem is that they did too little too late right now as far as SVB is concerned. I don't think confidence is coming back in yet. Hopefully, maybe they can do something to restore confidence back in. Who knows? But I believe no one stepped up to the plate to buy SVB because toxic assets, right? And every single bank will have toxic assets because the sovereign debt is now toxic assets. That is the current situation. That's what I think is going on. I could be wrong. Again, not a financial advisor, not financial advice. This information is intended for entertainment and educational purposes only. I hope I'm wrong. Just giving you a heads up as to what's going on and what I think is heading out there. Okay. So gold and silver, maybe. Who knows? Don't know. Crypto, maybe. Who knows? Stock markets. So the other interesting thing to note, in times of hyperinflation, the one place that is semi-safe is a stock market. Because if you look at the Weimar Republic during that point in time, they went to the stock market. If you look at Venezuela and things like that, when everything goes under, the companies that are still doing stuff might still have value. So you might be able to preserve some wealth in the stock market, but who knows? It's hard to say. The whole thing could crash. Very hard to say. So anyway, that's what I'm thinking. So thank you all moderators over there for moderating. Much appreciated, and thank you for thank you, Daphne, especially. And I'm not the only guy on YouTube. There's a bunch of other people who are smart and know what's going on, so you can check out their videos as well too. Check out Houston Wade. He'll probably have a different opinion than me because he tends to be more optimistic, I think. He tends to have more faith in regulators, and so hopefully he might present you with a more optimistic view. Check out also, yeah, check out a bunch of people. William Ferrand knows what's going on. Most people who have looked at economics understand what's going on. But if you have an economics degree, I don't know. I don't know. Just kidding there. So I'm going to be heading out, but just wanted to say goodbye. Thanks for watching. Just wanted to give you a heads up. Again, chance if I hope I'm wrong. I really hope I'm wrong. Anyway, that's it. Goodbye. Thank you very much. And that's it.